The moving average ribbon functions as the physical suspension system of a high-performance racing machine, managing the mechanical load generated during rapid price discovery. Many participants view price retracements as random events or targeted attempts to trigger stop-loss orders. When price pokes through a standard moving average, the resulting panic often leads to the abandonment of a trading plan, resulting in a series of emotional execution errors. An institutional framework treats these pullbacks as a distribution of force. The ribbon acts as a buffer, designed to absorb the momentum of localized profit-taking without compromising the underlying trend. The DRW Kinetic engineering model utilizes three specific layers: the 21, 34, and 55 exponential moving averages. These EMAs are calibrated to represent specific load limits. Each line serves as a structural threshold that dictates how the vehicle should handle various market velocities. Attempting to navigate high-speed market trends without defining these spring limits is the mechanical equivalent of driving a vehicle with no suspension. Mapping these specific structural boundaries automates the decision-making logic for risk management, allowing the math of the system to dictate the response to volatility. We begin with the 21 EMA, the shallow spring. This is the first layer of the suspension system. This spring is active during hyper-aggressive trend days where institutional algorithms maintain maximum forward torque. In this environment, market makers prevent wholesale price expansion from escaping. The result is a series of shallow pullbacks that barely penetrate the topmost layer of the ribbon. Under the runaway trend protocol, price remains front-run by the 21 EMA, compressing slightly before the next expansion leg begins. A subchart monitors telemetry. For the shallow spring to hold, the momentum histogram remains vertically locked above the zero baseline. When these precise conditions align, the price action taps the 21 EMA line and immediately accelerates out of the corner with massive forward momentum. This rapid micro-rebound frequently captures liquidity from those who interpret the brief downshift as a trend reversal. As long as the subchart telemetry stays positive and the shallow spring remains intact, the strategy dictates holding trailing runners to capture the full move. When a heavy block liquidation occurs, the force often exceeds the capacity of the shallow spring, causing the suspension to compress deeper. Price then falls to the 34 EMA, the chassis floor. This is the ultimate structural test of the trend's integrity. The 34 EMA represents the threshold for sustainable trend velocity. It is the solid frame that must hold for the vehicle to remain operational. Selling often occurs right as price reaches the structural floor, providing liquidity for institutional algorithms. We look for specific telemetry. Volume profiles should dry up to a thin sliver exactly at the 34 EMA, indicating selling pressure has been fully absorbed by the chassis floor. A successful defense of this level is marked by a structural rejection wick, where price bounces violently away from the concrete floor. The nested C-wave trigger is only utilized once the rebound from the 34 EMA is proven, confirming the suspension has recovered its posture. Stabilization at the 34 EMA confirms the frame is intact, providing a high-conviction zone for scaling position size with managed risk. If selling pressure continues to mount, the 34 EMA floor will eventually fail, shifting the load to the final safety threshold. This is the 55 EMA, known as the deep chassis frame. It acts as a governor valve for the entire trend. Structural invalidation is mathematically confirmed when a candle closes solidly below the 55 EMA layer. At this point, the frame rail is warped. The high-velocity expansion phase is over. The market shifts from a vertical runway into a slow macro swing cycle. The histogram confirms this shift, with expansion bars flattening into neutral compression blocks. When the 55 EMA fails, the protocol is clear: accept the structural invalidation and exit the track immediately. Averaging down into a position when the chassis is broken is a violation of the mechanical rules of the engine room. Respecting the deep frame limit protects core capital, ensuring that the machine is preserved for the next high-velocity opportunity. This suspension telemetry index integrates all three EMA layers into a single operational framework, defining the load limits and tactical laws for every stage of a trend. This synchronized approach differs from the use of generic, uncalibrated indicators. Standard moving averages often lack internal structural pressure, acting more like a blown-out strut than a tuned suspension system. Without precise calibration, these lines generate lagging static, leading to constant errors during normal market consolidation. The DRW philosophy relies on institutional math to handle the mechanical load of the market, removing the need for subjective interpretation. By treating the ribbon as a dynamic mechanical limit, the operator automates risk management based on the physical laws of the trend. The objective is the preservation of the trading machine, allowing it to endure volatility and capture macro-scale movements. Operating within these calibrated suspension limits ensures the vehicle remains on the track, even during high-velocity price discovery. This mechanical approach protects the machine and prepares the operator for the next feast.